I still think that we can get 130. If we don't hit 130, I will be shocked. But I still think we can hit 150, 180 by the year end. It wouldn't surprise me in the least. Look, I've thought that we could hit 150, 180 sometime this fall for a long time. I'm kind of surprised how hard we bounced off that 120, 125 level a few times here. And so, does that give me pause? No. Do I think that the 4-year cycle is over and bring it all the way back full circle to your question about Bitcoin in the beginning? I mean, I think it's changing. And one of the things that we didn't talk about is because of just the sheer amount of institutional capital that's coming into the space. And what happens is when you get institutions that decide that they need an allocation to this thing, they start rebalancing their portfolios around it. And so if they wanted a 1 or 2 or 3% position in Bitcoin, if Bitcoin goes down, they buy some more. If it goes way up, they sell some because they want to keep it at that 3% position.
James Lavish begins by giving investors who are beginning to lose their composure a reality check. After months of ambiguity, people are starting to wonder if Bitcoin is nearing its peak or if this is simply the quiet before a major move. Lavish delves further into the underlying dynamics at work, such as institutional positioning and changes in liquidity, and explains why what appears to be a period of stagnation could actually be an important setup procedure. He contends that rather from being indications of weakness, these sideways trading sessions serve as the cornerstones of Bitcoin's long-term cycle. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
It really hasn't had any of the euphoria sort of dopamine hit of previous cycles. What do you think's happening?
Well, I mean, first of all, people have been frustrated just because I think they're a little bit fatigued. It's just been a long, grinding sideways summer, if you start out in the late spring, we were grinding from 100 to 110, and then we ground all the way through until July, and then we started grinding from 110 to 120, and now we're back around 110 now, a few days ago, and people are like, what are we doing? Is it? Have we hit the high? Is this cycle over? Like you said, is there no more cycles? Are there no more 4-year cycles? Like, what's happening? And at the same time, you had this, a little bit of euphoria around the Bitcoin treasury companies, and we can talk about that, but got ahead of themselves a little bit, and they pulled back, and people were getting fatigued about that, and voicing their concerns about it. And I think that it's just the summer, I mean, it's happened so many years in my career, Danny, where we're just sitting here in the summer. It's like, what is going on? And we're hedge funds, we're sitting at our desks every day, and there's nobody in Europe. There's nobody in Australia. Like, everybody's just off on holiday, and which is fine, and you should be. And we actually found that they have a robust backup system there because people are forced to go away for weeks at a time. And so, but if you want to trade in July, August, early September, good luck. There's nobody there. So, but it's the same thing here in a way, in that's when people take off because their kids are off in school and all that. And so you have young executives young investors who are taking off, and they're not active as much. And so the volumes are way down. So if you look at Bitcoin, volumes have been really, 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 really light. I mean, there's been nothing that has been shocking. And even though they're really light, the market, the street has just swallowed hundreds of thousands of OG coins that we know of, and that they've just and the price didn't really move, I mean, a couple percent maybe. If you tried to sell 80,000 coins 5 years ago, what do you think would have happened? So, and you had some people that were also at the same time, Danny, they're selling Bitcoin to turn around and buy treasury companies, and treasury companies get that capital, but they're not, using it yet, or they're getting capital from private funds like mine and or hedge funds like mine, and they're not deploying it yet. They're not buying the Bitcoin yet. So capital's coming out of, and we physically send Bitcoin to them or whatever. And so that's like there's either selling of straight Bitcoin or just a pause in buying of it. That and then because of the MNAV situation, if you've got companies that are tapping the MNAV, that tap in the ATM with their market, NAV to Bitcoin over 1.5, and you're not buying, you're taking dollars out to buy these companies that would have otherwise probably just bought Bitcoin. So that's 33% of the capital that's not being used to buy Bitcoin. So it's been a weird period. But all that said, am I bullish? Yeah. And I'm actually bullish short term too. I mean, now we're in a situation where all eyes are on the Fed. Like every single thing that happens on Wall Street is kind of centering around these economic indicators that are pointing to the Fed having to ease. And so it's priced into the market. 25 basis points is priced in. I still think we're going to see periods of volatility, extreme volatility when there's market drawdowns, in particular, and then extreme volatility to the upside when there is a reaction to it from central banks. So I still think there's going to be volatility, but just we're in this period of summer doldrums, just quiet. It's just grinding sideways, waiting for something to happen, waiting for something to move. It's been mostly following expansion of global liquidity this whole time. It just lags by 10 or 12 weeks.
Liquidity is the primary driver of Bitcoin. Bitcoin typically follows a rapid expansion in global liquidity with a robust rally, frequently after a little lag of a few months. On the other hand, Bitcoin is also impacted as liquidity becomes more scarce. This places Bitcoin in the same class as assets like gold and stocks, which investors use as safe havens of value and as inflation hedges in unpredictable times. According to James Lavish, Bitcoin has shown one of the best links to global liquidity in recent years. This is a significant change for something that was previously written off as a fringe experiment. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Bitcoin's been following it closely. Gold's gotten ahead of itself here, according to those measures, but, Bitcoin has been following it. And I think that we're going to continue to expand liquidity here going into the fall and up to at least the beginning of next year. So I'm not worried. The only thing that concerns me is some sort of black swan event that seems to come every 7 to 10 years. That the 100-year event that comes every 7 to 10 years now. So look, I've thought that we could hit 150, 180 sometime this fall for a long time. I'm kind of surprised how hard we bounced off that 120, 125 level a few times here. And so, does that give me pause? No. Do I think that the 4-year cycle is over and bring it all the way back full circle to your question about Bitcoin in the beginning? I mean, I think it's changing. And one of the things that we didn't talk about is because of just the sheer amount of institutional capital that's coming into the space. And what happens is when you get institutions that decide that they need an allocation to this thing, they start rebalancing their portfolios around it. And so if they want a 1 or 2 or 3% position in Bitcoin, if Bitcoin goes down, they buy some more. If it goes way up, they sell some because they want to keep it at that 3% position. And that does dampen volatility. And that's going to continue to happen more and more and more as Bitcoin is continued to be adopted by institutions. And so, but I still think that Bitcoin, it can be extremely volatile to the upside too. And so people sometimes forget, all they see is those 50, 60, 70, 80% drawdowns, like, oh my God, this thing is volatile to the downside. Remember, it rips higher too. And I don't know if it's true this year yet, but over the last number of years, or since the beginning, you had like almost 90% of your returns in Bitcoin could be captured in just 10 trading days a year. Mm-hmm. It really has violent moves higher. So that's an interesting thing to remember too. So I still think that we can get 130. If we don't hit 130, I will be shocked. But I still think we can hit 150, 180 by the year end. It wouldn't surprise me in the least. If liquidity goes up steeply, Bitcoin goes up steeply, lagging it by almost 3 months. Comes down if liquidity is drawn out of the system, it feels it. So it does the same thing. And what's interesting about this is stocks do the same thing, equities, because people use those as places to tuck capital in order to protect it against inflation. They use stocks, they use gold, they use Bitcoin. So it's interesting. It's really it's become one of the best closest correlated assets to liquidity, global liquidity, over the last couple of years. So, but you have these periods. So, if you look at global liquidity, and Michael's thesis says that every 6 to 7 years, the global liquidity goes in these cycles, right? 6 or 7 year cycle. We're coming to the end of this expansion of this cycle, which means that. And this cycle is supposed to end at the end of this year, beginning of next year. So if you think that global liquidity starts to tighten, if it's being drawn out, then at the beginning of next year, that would give Bitcoin to somewhere in the spring to summer to kind of top out, all things being equal, Does it follow it perfectly? No, of course not. It's Bitcoin. It sometimes wants to march a different way, but it typically does correlate to it over those long stretches.
In closing, James Lavish reminds us that although the sideways grind of summer trading can be discouraging, it does not indicate that the cycle is broken or that Bitcoin has slowed down. We are witnessing a natural dip in activity, vacationing investors, and a temporary shift of wealth away from Bitcoin itself and toward Bitcoin treasury firms. However, something much more significant is taking place behind the surface. Institutional money is gradually making its way into the market. Due to Bitcoin's ability to gradually reduce excessive volatility, these big funds and businesses are already restructuring their portfolios to incorporate it. According to Lavish, Bitcoin is still strongly linked to global liquidity. As liquidity grows, Bitcoin follows, frequently a few months later. For this reason, he views the present quiet as a prelude to the following leg higher rather than its conclusion. The overall trend is still optimistic, even though there is a chance of brief declines or even unexpected black swan events. He points out that traditionally, most of Bitcoin's gains occur within a few trading days annually, so when the time comes, the rise might be strong and abrupt. Patience is the most important lesson for investors. The summer slump is short-lived, and institutional players are just starting to enter the market. According to Lavish, Bitcoin may not only return to the $130,000 mark, but even reach $150,000 or even $180,000 before the year is out if liquidity continues to grow into the fall. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.